Good morning. Welcome to the Milk Road Show, the daily crypto show where every red candle feels like your bracket just got busted. I'm your host, Jay Hamilton. It's Saturday, March 22nd. And because it's Saturday, it means we're back with the Milk Road Pro research team. That's right. Kyle, Martin, Adrian are going to join us today. These guys, all they do all day, every day is research crypto. Now, today's episode came out on Tuesday for our Milk Road Pro members, but we're releasing it to you guys on Saturday. If you want to get this out on Tuesday, you could go pro. If not, just wait till Saturday and it'll come out every Saturday. In today's episode, we were really stepping back recently, and the Milk Road research team really was focused on, hey, how do we make sure that our community is not losing money in their crypto investments? Look, we can't tell you exactly what to invest in. You're going to make your own decisions on what tokens you want to invest in, and sometimes you might lose. But over the years, we've seen a lot of traps, a lot of mistakes that a lot of crypto investors, I mean, investors in general, but specifically crypto investors make. And so that's really what this conversation is about today is what are those mistakes and how do you fix them? And you're going to hear from four of us who we've made these mistakes before. No one knows it better than us because we've been here for a long time, and we've seen these mistakes made over and over again. And we don't, no reason for you to make these mistakes. You don't need to lose more money. You can just be up from here, I hope, as long as the markets come back, and they will. Don't lose hope. Before we jump in, if you are making any trades, if you are changing your portfolio in these markets, as we talk about in this episode, we actually talk a little bit about allocation. And if you want to do any reallocation, highly recommend you check out Milk Road Swap. This is our swap. It's a DEX that we built along with CowSwap and Radium, where you can swap both Ethereum and Solana tokens for really low fees, some of the lowest fees you can find anywhere on any DEX. And it's super easy to use. So check it out. Link is in the show description. Go use it today. Today's episode is brought to you by Definitive Advanced Trading on every chain. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin CSUSDL. Without further ado, let's hear from the boys.
Gentlemen, back for another pro research meeting. What's going on today, guys? We're going to have a banger. We got lots to talk about. Well, actually, we don't have a lot to talk about. If you've been on Twitter,
we're still here, though.
We're still here. But
right?
You know what's funny is like
get credit for
everyone right now is talking about Solana's marketing ad, if you guys saw that. And everyone's complaining about that. And then basically no one's got anything else to talk about because there's no narratives. There's not much going on. So we'll try to bring some good things for everyone to talk about. We're going to start with some just some market stuff. We ran a poll just to kind of see where everyone's heads are at. So we'll discuss that. We're going to discuss just some pointers about how to manage tough times in markets. I know it can be a struggle for a lot of people. We'll share some experiences that we've had, and then we're going to talk about a few things in the AI DeFi world, and we'll see where we go from there. Sweet, let's do it. So let's bring up my screen real quick. So I put out a poll yesterday, and again, we're recording this on Tuesday, March 18th. You guys will see this. Well, pro people will see this today, but others will see this on Saturday. So I just asked, how's the timeline feeling about the markets right now? What's your take on where we are heading? The four options were full bear market, V-shaped recovery, multi-month pullback, or it's all over. And I'm not going to lie, I was hoping for a little bit more bears to answer this. Oh. And the number one answer was V-shaped recovery at 43%, which really scares me. It means that probably people answer that because they're fully invested and they think or want the markets to move tomorrow. And then the second best answer was multi-month pullback, which is 40%. So we're basically like 80 whatever percent, 83%, I guess, that we are still in a bull market. And then 17% that we are, 12% we're in a bear market, and then 5.5% that it's just all over and crypto's done. What are your guys' initial reactions or takes on this? Anyone have any opinions?
The majority is normally wrong, so I also don't like this too much.
Why did you want more bears? Why were you upset that there weren't more bears here?
Because for me, I like to do non-consensus takes. Like I like to invest in something that's non-consensus. If it's consensus that we're still in a bull market, that means everyone's still allocated, right? And what you really want is a capitulation event. You want everyone to be not allocated and prices to be where they are right now, right? Like if that's where you're at, that's your entry point. It's like sentiment's really bad, prices are down, and everyone's already out, right? Everyone's thinking it's a bear market. That's when generally things will just rip, right? Because the moment things move, everyone's on the sidelines and they can put their capital in, and that's when things just go crazy. And just from this poll, what I'm seeing is we're not there.
Bottom is not in.
Exactly.
We're not at the
Exactly.
bottom yet.
That's my take from this poll. Is the bottom's not in. I think we need to see like I'll do this poll again, and like maybe I'll do it every week for the next couple of weeks. And I think we need to see it at like, I don't know, 30, 40%. You know what I mean? Like it should be the number one thing. Once it's number one of the 4 options, then I'm calling the bottom and I'm going all in. I mean, I'm already pretty well all in, but like then I'm really putting more and just like then I'm bullish. Right now, I think we got a lot more time. Anyone else have more takes on this?
But
It's
these
also
polls,
the platform. Sorry, Martin, you first.
yeah, I was about to say that to me, it feels more like people vote what they wish for and not what they think that's gonna happen. And it's a difference, you know? So they're like just bringing that hopium, like, hey guys, don't worry, we'll be back up soon. And like, guys, like, maybe, but most likely not.
Adrian?
And it's the platform, because basically on crypto Twitter, there's the same few hundred people that were there for the last 4 years. Maybe on YouTube, on TikTok, you would have gotten another outcome of the survey.
My followers on Twitter are all very smart and very aware of markets. Okay, come on, they know what they're
Yeah,
doing.
defend them. Yeah, come on.
You're a good influencer.
Yeah. Look, my thinking is like sentiment is getting quite bad. Not even just in crypto, but in the equities markets as well. But I don't think we're through this yet. I think there's more time. We need more pain, to be completely honest. Mainly because one, I mean, this poll kind of shows why we need more pain. But 2, we're still not at a place that is good for a bull market, right? We still can't be printing money and bringing rates to zero. We need the economy to get a bit worse here, which is, as we've talked about before, and I think many of the guests last week that were on the show were saying, it's like we need that growth scare to be a bit further, and we're not quite there just yet. And so I just think that there's more pain to come. So again, I don't think everyone needs to like sell or get out of the market. I don't know how much lower things are going to go, but ultimately the economy needs to get a little bit worse here before things get better, which generally, as that happens, you'll see this poll move to more people thinking we're in a full bear market, right? Because things will just get worse and worse and worse, and it just takes time. I bet you if I did this every week for the next couple months, you'll just see it slowly transition into more people going bearish, more people going bearish. We'll see what happens with price at that point. Like you never know. Like it could stay the same or just continue to chop around. So we'll see what happens. But always interesting to check out the timeline and what they're thinking.
You were saying earlier that you want to be in trades that are not consensus yet. So
Yeah.
if you should name one token that's not consensus and you are really bullish for this cycle, what would you say?
That's a good question. For this cycle or for long term?
For the cycle.
I'm really struggling with this one right now. One of the things we're going to talk about later in the show is just like I'm really rethinking a lot of the crypto industry and the valuations of a lot of these assets. And so I'm kind of like in between a lot of theses right now, and so like my mind is everywhere. And so I'm actually not fully convicted on much other than like majors as usual. My answer would be Coinbase, to be honest. That's the thing I'm most bullish on. When I think about like what's the thing that even if we did go in, like if we continue to chop for a while here, like Coinbase is still able to make moves that can generate more revenue and lower their expenses. They can acquire a company. They can do a lot of things that like assets, like the other majors, like let's say Ethereum and Solana and whatever, like they can't do much during chop times, right? It's like they're not going to like all of a sudden make so much more activity happen on their chain. They just have to like kind of sit there and just let things happen. Whereas like Coinbase, because the company, they can do more things. And so I feel better there. And then just ultimately, I think where things go, I think Coinbase is just gonna just crush it. So I think that's my highest conviction bet. That's the thing that I'm buying the most right now. And I'm hoping, I don't know how much lower it can go. But if it does go lower, like even here, I think it's a great buy, but I'd be continuing to buy and be backing up the truck and loading up if it continues to go any lower. What about you guys?
Okay, I'll be next. I am getting more and more bullish on Ethereum
Oh,
because
whoa! I thought you were gonna say Tia.
many people in the industry, like I just read some tweet from the partner in Dragonfly Capital. He had talked with executives from Ethereum Foundation, and he just said like, "Hey, this is like new leadership is doing changes, and it makes me very bullish on Ethereum again." Then I saw Uma from Succint, who is building ZK proofs on Ethereum. He also said like, "Hey, I'm getting like a lot of good feedback from people building on top of Ethereum that like there is a lot going on and everything signals like that we are gonna do really well in the future." So it starts to feel like Ethereum might be sleeping for a couple years and focusing on research and academia and those kind of stuff. But now with a new leadership, it starts to feel that the ship is starting to move again and in the right direction, I believe. So now there is a consensus that Ethereum is going to die and Solana will take over and blah, 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 all that bullshit. But now maybe it's already at the prices where it's starting to be really interesting to buy back. Like you cannot do cash flow valuations for these projects just yet, but like you need to think long term. And I think Ethereum is still in the best position to be like the second biggest crypto. And yeah, like all these developments that are happening right now there, it feels very, very optimistic.
If you're only trading on centralized exchanges, then you're not going to make it. The best traders know the alpha is on-chain. Definitive, founded by Coinbase alums, lets you trade any token on Solana, Base, or any chain all in one platform. What makes Definitive different is its advanced order types. You can execute limit, TWAP, and stop loss completely on-chain. Plus, you get the best prices as your order is routed instantly through every DEX and liquidity pool, getting you up to 19 times lower fees. Trusted by funds, whales, and the milkman himself, now you too can trade like a pro. Milk Road listeners get a tasty glass of milk with zero fees on your first 25,000 at milkroad.definitive.fi. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security. Backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial, put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on-chain, including Aave, Gitcoin, and hundreds of leading institutions, CYCSUSDL is gaining traction at milkroad.com/Coinshift.
Speak of a non-consensus trade. There it is.
It's a good one. It's a really good one.
Yeah, I mean, I tend to agree. I have been getting a little bit more bullish on Ethereum lately, just seeing what they're doing on the BD side of things. Like they're actually trying to build a business now of Ethereum, which I think is really exciting. And then, as I said, I'm working through a lot of theses in my head right now. A lot of this is what we talked about last week in terms of this sort of like the app chains. We're starting to see this like trend of maybe these generalized L1s not offering what these apps need. And so they're kind of launching their own chains. And I think in that world, like as we mentioned, Celestia can be a big beneficiary of that. But Ethereum ultimately is the leader in that right now. And I think we'll continue to benefit there. So I think Ethereum continues to position itself for the future. And people hate that right now because most people can't see the future, right? They think about where things are at right now. And so I think that's why it's gotten so much hate and why it hasn't done so well. But I agree. Every time I think about where crypto is going and I rethink of my thesis, I'm always like, who's best suited for that? I'm like, it's Ethereum. It's always Ethereum. But I know people struggle to kind of wrap their heads around that. You guys have any other thoughts? I'm Coinbase, Martin's Ethereum. What do you guys got?
Non-consensus trade. That was the question, right?
No, it doesn't have to be non-consensus. Just I think it was, what's the one thing that you have the most conviction on for this cycle?
Okay, most conviction. Go ahead, Adrian.
I would have said Jupiter till a few weeks ago, until this whole meme coin dilemma happened basically, and the Jupiter or the Meteora team was kind of involved with these market makers that did some very questionable things. But Jupiter basically as the front end of Solana was a very, or maybe still even is a very interesting token. They have the buybacks, they have great plans for the future, basically with their own chain. It's one of the apps I used the most during the last year, I would say. So it's just a product that I really understand and really like, and that's where conviction comes from.
Right. Jay, what do you got?
Most conviction? Like, I mean, if I'm honest with myself, Bitcoin, right? Most conviction, right?
So boring.
I know. But if you're gonna, like, you know, if I'm honest with the question, like most conviction this cycle, Bitcoin, definitely.
Yeah,
I like what you guys. I like the Ethereum conviction as well a lot, though, and my bags would definitely say that I have the most conviction in Ethereum. So,
Bitcoin is definitely set up to continue to do well, and more so, especially during this time where there's a lot of uncertainty and probably a lot of chop. Like, you probably want to be holding a lot more Bitcoin, and it's not like people don't hold it because like, well, but when markets pump, you know, you're not going to get great returns. It's like, man, Bitcoin's probably still going to double, you know, from what are we at now, like 80,000 or something like that. Yeah. Like, is it going to go to 160? Yeah, I would think so. If not, maybe a little bit higher. So like, what, you're mad at 100% return? Like, I think it's a great risk reward. So I think there's no harm in holding Bitcoin whatsoever. It is another thing I have been accumulating for the last little while, actually. So I think that's a good call as well. Okay, let's just talk about Adrian. I don't know if you have, I guess we don't need anything up on the screen here, but we want to talk about our opinion. I think most of us here is that we're not going to get a V-shaped recovery. And this is not a bear market either, but probably months of chop. Generally during that time is when people make the most mistakes, because it's not chop as like, you know, Bitcoin just stays at 84,000 for the next 3 or 4 months, or ETH stays at, 2,000 or whatever it's at for the next 4 months. It's Bitcoin might run up to 90, 95K and everyone's like, oh my God, we're so back. And then all of a sudden it'll go back down to like 70K. And it's like, oh, it's all over. Then it'll go back. And like, it could happen multiple times in the next few months that we just like, remember, these things are very volatile. So it could have 20, 30%, whatever volatility throughout this time. And during that time, this is when people make a lot of mistakes. And so we just want to discuss, I guess, some common mistakes or some tips or whatever. Adrian, why don't you start us off here? But that's some kind of context of where this discussion is going to go.
Yeah, exactly. I would say even in a bull market, in the whole bull market, people make the most mistakes, because bear markets are actually quite easy. There's not a lot happening. You have your attention. You are probably buying over several months, several valid tokens that will perform in the future as well. But the bull market, your attention gets spread so much. And that's actually the first big problem. Your whole attention, it's spread way too thin, because you can just lose sight over what's really interesting and what's really important. And if you're chasing every single new narrative, like we had them last year, for example, if you were chasing meme coins, then AI agents and so on, and you're not doing this full time, you will certainly lose money. And you should basically just focus on what really are your strengths. And are you an investor or are you a trader? You should always be aware of that, and don't ape into every small opportunity. Even though the market seems boring right now, for example, you need conviction, because otherwise, if a token goes down 50%, you might sell and panic. If you don't believe in what you're holding, if you don't have an exit scenario when you enter, it's not going to work.
I think I just saw someone message in our Discord group yesterday and was like, hey, Kyle, I'm finally listening to your advice. I've sold a bunch of shit coins basically and just throwing it into majors. He's like, it feels good to like, feels like I'm cleaning out the garage or cleaning out the basement. And this is the thing we always say is like, if you hold, I don't know, 20 plus tokens, like I actually think everyone listening right now that we're in, a big pullback, these are great times to like go look at your portfolio and be like, what am I holding? Do you hold 30 tokens right now? If you do, you probably should get rid of a bunch of those, right? Like, do you really understand all 30 of those tokens or 50? Like, some people hold like hundreds of tokens. And it's like, do you really understand them? If not, you're stretching yourself too thin. You have no idea what decisions you're making on these things because you don't know what they are, right? So like get out of them. For example, in our pro portfolio, I think we hold 12 tokens right now, and we really can't go, we try not to go any higher than that. Like we want to be around 10. And there's, 3-4 of us managing this portfolio, keeping an eye on all these different tokens. And we got a full team doing this here. Like researchers is what we do full time. And we don't even want to go past like 10, 12 tokens. And so if you're one person doing this part time and you've got 20, 30, 40, 50 tokens, you might want to ask yourself if that makes sense. Should you really hold those? Do you really understand those? The answer is probably not. And so that capital is much better in the boring old Bitcoin, right? You move out of Bitcoin if you think you have an opportunity to beat it. But if you don't even know what these things are, that opportunity is not there, right? So tip number one in these moments is like, go look at your portfolio and see how much do you really know about those tokens. And if you don't know it a lot, and as agents said, if you don't have strong conviction, sell it. Even if it's at a loss, who cares? Just sell it, get out of there, put it into a major. So that you at least, as we just said, maybe it goes up 100% for the rest of this year. Like, don't you want to at least make 100%? Like, that's a great return. And so simplify. Like, one of the best investment advice is just like do less, simplify everything you can. And one way to do that is like simplify your portfolio. So I think that's a great start and a great tip. All right, what's next on the list there, Adrian?
And maybe also don't think you are diversifying your portfolio with hundreds of tokens because most are correlated, especially if they are part of one narrative like AI, like DeFi. It's not working like that.
That's a good point.
If you want to diversify, get out of crypto. Go diversify in something
stable coins. That's
sure.
it.
Or that's true diversification.
Tech stocks is not diversification either. Like tech stocks, crypto, it's all the same shit, right? It all moves up and down based on liquidity. You're not diversifying any of that. Not saying you shouldn't also hold stocks, but actually, that's what Martin said today in our morning meeting. He's like, we should just own gold. Look at this thing; it's at all-time highs. There's your diversification. But yeah, great point. You are not diversifying by owning different industries. Not at all. At least not to the downside. Like it is smart to own in different sectors if you understand those sectors. But don't kid yourself in like you have a diversified portfolio that's like hedged against anything because you are not hedged. Crypto moves up and down together and will for probably a long time.
And also Adrian said something that it's a fight for your attention. And the thing I just try to improve myself and my processes is the attention management, because the sources, the information, the podcast, like all the things I consume will kind of define like how successful I am, how my thinking process works, like how my thesis play out, what my portfolio composition is, those kind of stuff. So I'm constantly trying to kind of revisit like all the podcasts I listen, like are they still bringing me the value I want, or like is it just fun and not really bringing me any new insights or something? Also newsletters you read and like everything. So it feels like be super, like try to think very critically and challenge your kind of routines and like, okay, is this still the relevant source of information I want to consume and it's giving me like the data or the insights I want? Because yeah, that's ultimately what defines your success or not. And it's not like just chilling here, hey, you should go and listen, our podcast here or read our newsletter. It's more like a broader idea how you should really think about your time management or attention management, because that's what in these days in the world where we live really matters, but people are not really rethinking that. So just wanted to highlight that out.
One note on that. I was on Twitter this morning and I saw someone like big influencer, I won't name names, and he's like, Bitcoin's going to 280,000 by the end of this year. And I was like, Jesus, what is going on? What are you tweeting right now? So just like still Murad, the meme coin guy, he's still like, we're about to enter the biggest bull market in history. And I'm just like, one thing to think is like, okay, we follow a lot of people in bull markets because like attention. And so during times like this, when there's less narratives, less hype, take a second on who you're following. Are the people, not everyone was right, and most people were wrong here, right? And that's fine. It's okay to be wrong. But look, and like, are there people are the people you're following or reading or watching admitting that they were wrong, or did they have a critical thinking around what just happened? Or are they kind of delusional and still like, we're still going to the moon, blah, 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 like V-shaped recovery, like nonstop, blah, blah, blah. In that sense, you might want to sort of, again, clean up the garage on who you're following, who you're getting your information from. So that's a good tip, Martin. All right, what's next up, Adrian?
Second point would be to neglect risk management, because it's very easy to get complacent on risk management in the bull market. But many people actually never rotate their profits out of crypto, and they might just be holding them in their wallet, and whenever it dips, they buy back in, and they might have to pay a lot of taxes then on it, but don't have their gains anymore. So that can actually be a huge problem, and you have to plan accordingly, do your taxes, and just get your basically risk management done. You should know when do you need to sell, when do you want to sell, because you can't stomach it anymore. If you're into very speculative altcoins, for example, we had it with the AI agent narrative. You basically need your stop loss if you don't want your portfolio to go down when you're heavily into altcoins or something like that.
When I think of risk management, I think the one thing that people make the biggest mistake on, that again, everyone should be looking at right now, is they listen to others, or they have a thesis to buy whatever token, AI agent or meme coin or whatever, and they put a significant portion of their portfolio into it. And I think people don't realize how much risk they're putting to their portfolio when you buy altcoins. Bitcoin is different, obviously, and most stocks are different, although in this world, they're quite volatile these days too. But if you're not buying a major asset that is a hundreds of billion or $1 trillion asset like Bitcoin or Apple or Microsoft or whatever, like you should not be putting a large percentage of your portfolio in these things, because they can go down, as we've all seen, 90% and then go down another 90%. Like that happens all the time. And so to put 50% of your portfolio in an asset that could go down 90% or 95% is absolutely insane, right? Because think of the returns you have to get to make that money back. And so I know people see us in our portfolio, for example, buying some smaller tokens, but what we do is we put like 1% in it, which is like, if it goes down 90%, I don't even care. I'm not even thinking about it. It actually doesn't impact me at all, right? Obviously, if Bitcoin or ETH went down 95%, that would very much matter to my life. But like if whatever token goes down 95%, it actually does not matter. But I think a lot of people that invest in crypto, they don't manage their risk that way. And so they have a lot of their capital, maybe thinking they're diversifying, as you mentioned, Adrian, in these smaller tokens, and they go down 90% in like a couple weeks, and they've lost almost their entire portfolio in the middle of a bull market. Like, and then you wonder why everyone's so mad on crypto Twitter, right? So you cannot, I mean, we say this throughout the entire bull market. We've been saying this, the bear market always is like 80% majors, 20% minors. It's been our thing since day one. But unfortunately, when we ran a poll a couple months ago, we realized that, what was it, like 80% of our pro members don't actually do that. They're actually way more invested in altcoins. And so they're not doing a good job at managing risk. And in an asset class that moves this fast, it's pure suicide to your portfolio to not manage that. So people got to take that seriously. If you want to win in this space, you have to do that, because you can't come back from a 95% loss in some shitcoin that probably is never going to come back, right? Like, remember, these things are tiny. They're not Apple or Microsoft. When they dip, you don't just keep buying that dip. It doesn't make sense, And,
Well, it all depends on how you approach your. I think a lot of people don't take the time to think about their goals with investing. They jump in, they hear about people making money in crypto, and they're like, great, I'm here to be rich. And that's it. Yeah. And they never write that down. But like in the back of your head, that's your reason for being here. You're here to get rich, here to get rich. So you're chasing that. You're trying to get rich as fast as possible. And the truth is that is a death sentence for investors. It's never gonna work. Like, sure, maybe anybody listening, if you got rich easily investing, please come and tell me. I'd love to have you on the show. We can break down how you did it and share it with everybody. But I'll bet you there's nobody here, because the real goal of investing is to grow your capital base over years and decades, to the point that you build wealth. That is the real goal. And that's how it works. And building your capital, if you approach it from, hey, my goal here is to build my capital base, then your risk is so different. You approach risk so differently. That was one of the biggest shifts that I had, was like in my mentality. I went from trying to get rich as fast as possible to everything must grow my capital base and I will never decrease my capital base. And like it totally shifted the way I managed my entire portfolio.
And by the way, it's okay to think that way. Like, and then it's okay to change, right? Most people came into crypto because they thought they were going to get rich quick. All of us did, probably, right? And that's fine. Like, that's just human nature. But the
Well, and the
key is,
problem is that a lot of us did paper rich. A lot of us did, right? Like that's the thing, right? Like a lot of us experienced that feeling of being rich.
Right.
We didn't take profits. We might not have actually been actually rich, but we had big gains in our portfolios. We took screenshots. We looked at our, our wallet and said, "Oh my God, I'm up so big," right? So we did feel it in a way.
Right. The key though to succeeding is, can you switch your mindset and go out of that, like you said, and think more long term about compounding results? And if you can do that, you'll actually end up becoming rich. If you stay in this mindset of I need to get rich quick, you will 100% get wrecked. Right. I mean, you might get lucky, like a lottery ticket, but you might as well just go buy lottery tickets or something else. Right. Like you probably have a better chance. I don't know what the chances are, but
and this is a great point, because you said this earlier in the show, is you said, I don't remember the context, but you said you don't need to be selling right now. Oh, we said this isn't the bottom. And you said, okay, even though this isn't the bottom, it doesn't mean you should be selling right now. And here's a perfect example. If you're trying to get rich quick, then right now you're not selling your shitty assets, because you're thinking my only path to my goal of rich quick is that this comes back, right? Because it's down 90% or 50% or whatever it's down. And I know Bitcoin's, maybe Bitcoin's going to go up 100% from here, but it's not going to be able to make up for the loss that I have on this trade. And so you stay in it, right? And that's also a big problem. How often do you guys rotate your portfolios? Like, how often do you do a sit down and actually reallocate and rotate?
Not very frequently, except for, so I'm probably 95% majors. Those I just keep adding to. Although, like, as I mentioned on the show a bunch of times, in I think it was November, December, after the Trump win, I was like, I'm not adding anymore here. I stopped dollar cost averaging. I've since restarted dollar cost averaging again. So I wasn't adding, I wasn't rearranging. I just kind of left it. But what I do rearrange often is that like 5 to 10%, it changes all the time, of my like alts, because those need to change, whether they go up big or they go down big. Like, you need to either get in, get out, like whatever. You do need a little bit more tactical there. But on the bulk of my portfolio, the part I actually care about, I don't do a whole lot on, to be honest.
Not a lot anymore, luckily. But last year, when I was doing a lot of on-chain trading, basically every day, I don't know, 50 trades or something like that. But it's so much stress, it's not really worth the time.
Wow. Martin, Mr. Stonehands.
I don't rotate like frequently. Yeah, I would say like 90% of my portfolio is pretty much all the time the same. And then I might just do some little moves, but like not tactically. It's more of a, maybe there is a new thesis around, so I still want to get like more exposure to that or something like that. But it's not like I think we are, reaching some local top, so I'm gonna sell now and maybe buy more lower. That's not what I do. Like, that's not like how I think, where my alpha is and where I have some advantage or like edge. So that's not what I'm doing. But maybe like once we are later in the cycle, I'll not sell spot when I want to leave. I will maybe use options to get out of the crypto, meaning like from the majors, selling like sell options, and then I will just be increasing, kind of collecting premiums, and at some point I will get out the positions into stables. But like, I don't really do anything these days.
The only things that I've done that were like rather large with my portfolio, with my majors, was like in 2023, I became very bullish on Solana early on in the year, and I'd been buying ETH through the whole bear market. And so I started to transition some of my ETH into Sol, and actually quite a decent amount throughout 2023. And then the only other thing that I did, but I still was like, in my opinion, Solana was kind of a major, or was becoming a major in 2023. And then the only other thing was like in December/November, when I was like, okay, starting to think there might be a pullback here. I still wanted to stay in the market. I wasn't selling anything, but I moved a little bit of ETH into Bitcoin just to like, to me, that's de-risking. I know most people are like, oh, I got to be in stables or like, got to get out of the market. For me, I'm like, I'm not getting out of the market here. We're still early in the bear or in the bull market. But I was like, you know, there's other ways to de-risk that are not getting out of the market. Like if you held MicroStrategy, you could have moved it into Bitcoin. That was one thing I had suggested back then. There, I put a bit of my ETH because again, that was my biggest bag. I moved that into Bitcoin, and other than that, I haven't really moved. I haven't really moved much at all. I just keep adding at this point.
The boring portfolio. That's the objective. Have a super boring portfolio,
super boring.
and you'll do well.
If you want to sleep well, yeah.
This brings us into our next one, which is lack of patience. Adrian, why don't you kick us off there?
Yeah, sometimes trades or investments just take their time to play out. You can't expect 10x the next day anymore because this is another bull market than 4 years ago. So the assets, especially the more valid ones, they are just too big. They are not moving that much anymore. So give your investments time to breathe. Have your conviction, because being impatient can basically lead to cutting plays early and cutting your trade idea in the first place. And yeah, you should be able to limit yourself, to have an idea about your trade and follow your strategy.
I just pulled a picture up on the screen here. Something I tweeted out this morning, actually, which fits this perfectly. And it's a picture of Dan something said this. I think he's one of the co-founders of Masari. But he just tweeted out the picture of the price of Bitcoin, March 18th. So today when we're recording 2020, so 5 years ago, Bitcoin was at $5,340. It's up 1,443% in a matter of 5 years, which is absolutely insane. And my take was just like the longer you hold good assets, the more you increase your chance of making money, right? It literally is that simple. And the sooner you realize this, the easier investing becomes, which it goes back to our whole idea of like, keep it simple, do less, right? Like, again, if these are good assets, all you need is time for them to do well and forget everything else that happens in between. If you don't care about macro, you don't care about politics, you don't care about what's happening in crypto, you don't have to think about any of that stuff, right? You can just go focus on your wife or your kids or your job or whatever. You don't have to think about any of this. You don't have to watch our podcast every day. You literally can just buy this stuff and just like chill, as long as it's the good assets, obviously not your like shitty meme coins and AI agents and whatever, but like the good broader assets, which is the same as how the internet worked. Like for the last 25 years, everyone has said that tech stocks are overpriced. And yet if you just kept buying them, any day, choose a day for the last 25 years, you're up, right? Except for, the last month, because we're in a pullback. But again, zoom out. And again, as long as you bought the good ones, Google, Apple, Amazon, Microsoft, like you're up. And the same is true here, but it's just patience, right? It's people getting so upset when we go in a pullback, and these pullbacks happen 2 times a year, and at least, and yet people still lose their minds during these moments. And it's like, dude, just relax. Even if we're going into bear market right now, who gives a shit? You know what I mean? Like, just wait. And 2 years from now, 1 year from now, 3 years from now, 5 years from now, again, as long as you're in majors, they're going to be so significantly higher than they are today that like none of this actually matters. But it's that switching that mindset that Jay, you were talking about of get rich quick versus, thinking more long-term.
But maybe that's only true for Bitcoin and crypto. Because like if I should buy something and just go somewhere for 10 years, I would only hold Bitcoin and nothing else. Because everything else are still like very, very new experimental things, and we don't know what's gonna be here in 10 years. Like, is Ethereum going to be relevant in 10 years? Well, I hope so, and now we see positive signs that probably yes, but I wouldn't bet all my money on Ethereum being here in 10 years, not Solana and pretty much anything else. I'm not talking about Coinbase. It's a different thing. Let's talk about crypto only.
Whoa, Coinbase ain't crypto?
10 years is a long timeline. Nobody's thinking in 10-year timelines.
Right.
Listening to this show. But like generally you're right. Like, if the best way to the best investors, they think in longer timelines. look, if you want to think in short timelines and you want gains this year or next month, then you got to go be a trader. And if you want to be a trader, you got to be like, you got
Quit your
to
job.
quit your job, go full time, be ready to be as stressed out as Adrian was last year, right? Like, good luck. Like, there's a reason that not a lot of people do it.
But like in crypto, everything changes so fast. And like if you were a trader in previous cycle, you were probably using DYDX. And today DYDX is just, I don't know, it already died. Maybe they have their own chain, but no one's using it. It's like, so at some point you feel like, wow, they will always be traders. They will always trade on DYDX because everyone is here. They have all the liquidity, all the users, and boom, gone. So like, there are very quick like feedbacks in the market, and especially in crypto, and like new participants are entering, new token incentives, new tokenomics, like so many new things. So it's really hard to just buy something and just hope that it will be up in 10 years. And you really need to like here maybe like make your time frame shorter if you are talking about something else than Bitcoin, and like be really monitoring what's going on and if this thing is still has the potential to go up.
I think you can bucket ETH into that. Mainly because of network effects is the main reason why I say this. This is what happened with all the internet companies back in the day. Is like, if you understood network effects, you understood that these things were going to last no matter what. There were many times throughout Google's history where everyone thought that the thing was going to get taken over, and same with Apple and same with Microsoft, etc. But they had network effects, both in terms of their asset, but also in terms of their companies. And so they always were able to find their ways around, which is exactly what I think Ethereum is doing, right? Like Ethereum has network effects in terms of capital, in terms of developers, in terms of like thinkers in that ecosystem. And so like, look, did Ethereum get beat by Solana in the integrated chain world? Like 100%, but it's got enough capital, enough companies, enough people that care about it, i.e. network effects, that like they'll navigate the next thing and the next thing and the next thing, right? Like that's just how good companies are run, and really how network effects exist and why they're so powerful. But nothing else in this space really has that yet. I would imagine Solana probably does at this point, even though I know there's a lot of hate on it right now, but I think it's probably there. And again, we've talked about this like, last week we talked about integrated chains might not be the big thing anymore. Solana will probably find a way to navigate that because it just has network effects. It's hard for it to just go away. Now, of course, it's not always true, but generally when something, Ethereum at least has been around for like 10 years or something. So,
okay, they will still exist, but will their valuations be still higher than today? And like, then you have also like opportunity costs, right? So like, instead of buying Bitcoin today, are they going to outperform Bitcoin in 10 years?
All right, let's do the last one, which is FOMO, emotions, emotional trading, over trading, all this stuff. Adrian, you want to start us off?
Yeah, I think everyone knows fear of missing out, but actually not having FOMO or feeling it sometimes, even as an experienced trader, it's very, very hard because there's just too many opportunities, too much noise, which we already had. So always think about your attention and who you give it to. And yeah, it's so easy to think about all of this and try to get into different investments, but in most cases, it just helps to sleep one night over it and think with a fresh head about it the next day, and you might not want to buy the token then.
I was on a podcast yesterday, and they asked at the end, like, what's my like number one tip for investors, and I basically was like, investing is 90% psychological, 10% like conviction and like analysis. And it's like, if you can just learn to control your emotions, you will be a 10x better investor. And then I realized it's like, he actually, the guy really liked that. And he was like, not only a 10x investor, but a 10x husband, 10x father, 10x like entrepreneur, 10x like on everything you do. If you can just learn to manage emotions, you become so much better at everything you want to do in life. And so I can't stress enough about your ability to manage FOMO, to manage greed, to manage whatever other, stress, like whatever other feelings or emotions that you have in investing. When you learn to master that, you become elite. right? Because you can just think clearly through all the noise, which is not an easy thing. One experience that I had that really proved this to me was when COVID happened in 2020. I remember I was in Mexico at the time, and in Mexico, I was like in a small beach town. It's like COVID didn't really exist there. COVID was there, obviously, but like there was no shutdowns, there's no lockdowns. Life was just normal. And I remember calling back to all my friends in Canada, my family in Canada, that were just like watching the news every day. And they were just so stressed and high strung about life, right? They didn't know what was going to happen tomorrow, and they were all like confused, and they were coming up with these crazy ideas and things, and like, it made no sense to me. And I was sitting there like playing volleyball every day and surfing, and like life was so normal. And so like I saw the difference of the world on stress and me not on stress, and how much easier it was for me to make decisions, which in that world, I actually changed my investments a lot and bought a lot of Bitcoin during that time, and Ethereum, and even stocks, even though the world was ending and everything was down 50%. Everyone else was like, I'm getting out of the stock market. We're down 50%. I was like, what? So like things feel normal to me. And so in that moment, I really understood emotional control and like stress control, because I got to see most of the world be so stressed out. And I just happened to be lucky and not be a part of that. It wasn't like I could handle my emotions better. I just wasn't in an environment that was stressing me out. I wasn't watching the news. I didn't really have any impacts of like being locked in my apartment or anything like that. And so I just like every time I would talk with them, I could think so much clearer than they could. And it was a wild difference. And so that really was the moment where I was like, okay, controlling your emotions is the most important thing like in life. So it's a really good experience.
I mean, that's why everybody says touch grass, right? Like
Right.
touch grass
It's
is, a saying used in crypto so commonly that I think people don't kind of forget its importance,
means.
right?
Yeah.
Like that's exactly what it means. Like touch grass so that you can get away from it, so you can see a different perspective, because you can definitely get caught in tunnel vision and emotions if you're not taking a step away from it all, or living in some town in Mexico that's different than the rest of the world during COVID.
Yeah, I just got lucky there. Like in moments like this, the best thing people could do is actually just like log out for the next couple months. Don't do anything. Do you know what I mean? Like don't make a trade. Don't look at Twitter. Don't look at news. Literally do nothing. And you'll come back like 4 or 5 months from now, and like your bags will probably be up. You're not stressed out. Maybe you don't know what happened in the last 4 months, but it's like, who gives a shit? It probably doesn't actually matter to you in the long run, again, unless you're trying to trade the markets, then of course you don't want to do that.
People also sometimes just want to kind of boot their egos. Like there was Hyperliquid, and it saw a huge trend up, and so many people were just jumping in without even like understanding what's going on. And like at some point I was also like, okay, Hyperliquid, I'm not trader, so I didn't use it before, but the point is, that's fine that I missed that opportunity. I could bought hype on $5 and sold at 30. Yes, 6x, great. But like, I didn't learn enough about that project. I didn't invest it, and that's fine. And now we are back at, I don't know, 10. So you always have time to kind of just admit to yourself that you don't want to react based on the market pump on the markets. You want to react based on something that maybe someone else doesn't, or you have like deeper knowledge or edge, or what's gonna happen, what's next catalyst, or like some numbers that people are confused of, but you understand what's going on. So those are kind of the edges where I'm always looking for on the markets. And if something is pumping, it's probably not the best time to buy. So like admit yourself, okay, I'm too late to this train, but that's fine. I don't need to be there.
I think the best example of controlling emotions I've seen is Martin. So every day over the last however long, I come into a meeting with, our marketing team or our newsletter team or whatever, and they're all like, holy, you see what's going on in markets right now? Like talking about price. And then I'll come into a meeting with Martin, and he's like, did you see the newest proposal for Aave? Or did you see the newest proposal for like Tia? And it's like, I'll like ask him a question about markets, and he's like, who gives a shit? What are you talking about right now? Like, look at this. And he's like, I got this new thesis about DA. And it's like, he doesn't. So when I say like log out and do nothing for 4 months, Martin does the opposite, and he just doesn't pay attention to the markets. I mean, he obviously does, but like he's not sitting there trying to solve every moment of what's Trump going to do next to like move markets. He's instead like, I'm going to use this opportunity to build my next thesis. What is underpriced here right now? Like, what is the thing that's going to matter during the next leg up? And he just continues to like stay laser focused on figuring out, where the space is going and not caring about what's happening in the price volatility right now. And it's just funny. Everyone else I talk to, they're the complete opposite, And so this guy's got ice in his veins, just doesn't give a shit. And I think if you can get that kind of mindset, you're a 10x better investor for sure.
I remember when we
Right.
were on the retreat and everyone was checking the prices every morning and, hey, Solana is already like $200. And I was like, what the fuck, guys? Everyone's checking prices like multiple times a day. It's just, yeah. Well, I think because it's pretty simple. Like everything is driven by macro. I don't have like any insights, and I cannot be really proactive managing my portfolio from that perspective because I don't know what's going to happen in 3 months or 6 months. I have no edge, no alpha there, but I might have some alpha in crypto. And now we are at 2 trillion, but I think we will be at 10 trillion in a couple of years, and like that's my focus. I want to capture most of that upside there, and like macro will eventually align and everything will go up, and that's where I want to be in the best position to profit from that upside. So like, and also like looking at the markets, until stocks like S&P and Nasdaq are doing all-time highs pretty much on weekly basis, I don't care. Everything is fine, and it's like sending me like simple message: everything's fine. Like stocks are on all-time highs. Don't worry about anything. Then when I see like a dip 10%, okay, then I start to pay attention. So I listen to a couple podcasts. I talk to Kyle, and I will get an idea what's going on. Now it feels like we might have markets going sideways for a couple of months, and then we will go back up again. But I have always that secular trend in mind, and that's what I'm playing here. So that's why I don't bother about the prices.
That's a man who has most of his bags in majors, right? If you have most of your bags in altcoins and miners, it's impossible to not to do that, right? But when you're holding assets you really believe and have conviction in, it's so much easier to do that. So it goes back to our number one point, which was like re-look at your bags right now and readjust if you have.
You know what a really good exercise to do is just to write down all of your tokens that you hold and assign a ranking to them of your conviction. So high, medium, low, and anything that's low conviction, rotate out of it. Like do not stay in it. Like keep it that simple.
Here's another one you could do. If you're down right now, sell it all into a stablecoin and reallocate. What would you buy? I bet you a bunch of the things that you sold, you wouldn't have the confidence to rebuy again. And the beautiful thing is if your portfolio is actually down and you're not in profit, then this is tax harvesting, right? So you have a down on your capital gains, which can be useful in case you sell again later in the year and you're up. So there's like kind of two reasons why that would be good. But now I've never done that, but I imagine that would be a very powerful exercise. I think it would actually be really, really useful. But if you're up a lot, don't do that because then you'd be initiating a bunch of capital gains, which you might not want to do. Hey guys, let's start to wrap up. I don't think we're going to do any more topics because we kind of went, longer on this, which I think was actually a very great episode, very useful. I don't know how we should end it, but maybe just like a piece of advice from everyone, or how do you guys want to end this one?
I would say revisit all your portfolio, and like, you can maybe accept some losses and just maybe reallocate into the tokens you have more conviction in, and maybe more into majors. And don't wait. We were already talking about it, but people tend to wait until they are green on a certain coin, and they are not willing to sell today. It's such a mistake. And so like I would say, make sure that you took it as an opportunity right now to reassess your portfolio and kind of update it all over again, and make sure you have conviction. You have clear in your head that you have your portfolio well diversified and you have conviction. It's not like just you taking some high risks and buying some tokens which are, I don't know, below 100 million market cap, because those are obviously much higher risks than if you buy something much like, I don't know, 1 bill or something like that. So yeah, take it as an opportunity to really improve your portfolio and make sure that you are in a good position for the next leg up, which is coming probably in a couple of months.
And maybe know who you are. Do you want to be an investor? Do you want to be a trader? Write down your strategy, of course, and don't make the mistake when the market is boring that you start trading a lot, because you're paying fees basically, you're making losses, especially when you don't have the skills to be a trader. And narrative trading, for example, is not working properly. It might be working for some time, but if we see a downturn like now, then you have a big problem. And yeah, know your portfolio allocation, track your portfolio, know what you're really holding. So I guess many people have no clue about that.
I got to double down on you saying write it down. If you have a strategy right now or reasons why you're investing in tokens, write it down. I promise you it's going to be the best experience that you do, learning experience. Because in 6 months from now, when everything has changed in crypto and everything's changed in macro, you can go back and be like, why did I buy these things? What was my strategy with my portfolio? Like, what am I doing here? What am I thinking about? And how were my emotions back then? You know, because, you know, as Martin just said, in a few months from now, we're going to be up again. Your emotions are going to flip. You're going to get greedy, blah, blah, blah. If you get to look back on how your emotions were just 3, 4, 5 months ago when we were down 30%, that's going to remind you to not over allocate to stupid tokens, right? That's going to help you keep a level-headed on your shoulders, right? Because again, emotions will get you. When we go up, you're going to be super euphoric. And when we go down, like you are now, a lot of people are bummed out and they're stressed out. And so if you just write that stuff down and you go back and actually look at it, man, it's such a great experience. It's incredible. All right, Jay, we'll let you give the final advice.
Yeah, I would say I agree with everything you guys have said, and we'll try not to repeat and say something differently here. Going last sucks sometimes. I would say it's okay to sell at a loss. Like, I think that is a very hard thing to stomach. I think a lot of people really struggle with selling at a loss. And so you convince yourself that it's going to come back, or I don't want to take this loss, or the pain is too great to sell at this loss. I don't want to admit defeat, right? But the thing is, like, in life, sometimes you got to like take action and then learn from the experience, then move forward. And I think if you're sitting here and you have not sold at a loss before, and I'm not saying to sell at a loss on like your majors, I'm saying like meme coins, altcoins that you have low conviction in, anything that you have lower conviction in, go sell at a loss. There's nothing wrong with that. You will learn a lot from that experience of selling at a loss, of feeling what it's like to do that, of going through it, and mostly of seeing where you are as a result of this months from now, 6 months from now, a year from now, how this decision today will impact you in the future. And I will bet you it'll impact you positively. Now, look, I don't know every single token, obviously, but don't be afraid to make tough decisions like that, because it will be good for you.
Feels like we're in a Alcoholic Anonymous meeting right now.
Yeah.
Like a little therapy session, which honestly in our pro Discord, I feel like that every day. Sometimes we're congratulating and clapping people for like selling their shitty bags. It's kind of hilarious.
True.
But hey, all this is to make everyone stronger, a better investor. So it's good to have friends you can chat about in markets, chat about whether it's like your psychological like components around investing, or it's your thesis around investing, or it's your strategy around investing. Like always good to talk with friends about that. And that's why Milk Road Pro is here. And I think the Milk Road Show is here. We do it every day. Yeah, we're happy to have these conversations. So thanks everyone for listening. Hopefully you guys enjoyed this one. It was a little bit different. We didn't share a lot of alpha, but honestly, this was probably the most alpha you're ever going to get if you actually listen to it. But most people won't. But hopefully you guys will. If you do, well, then we'll see you at the end of the bull market where you'll be making a lot more money.
But before we wrap, I just got to throw in, if anybody is still listening, shout out. Thanks for still listening. Thanks for still being here. And Kyle and myself are going to be at Consensus in Toronto in May. And if you guys want to hang, if you want to meet us, we're going to be doing a Milk Road meetup. We'd love to see you guys there. I'll be interviewing Kyle on stage. Adrian, Martin, I don't think you guys are going to make it, unfortunately. But anybody listening, if you want to meet, if you want to hang, we got discount, $350 off Consensus tickets. Hit the link in the show notes. Grab your ticket today. It's May 14th to 16th, and we would love to see you there. Otherwise, thanks for listening in, everybody. Have a wicked awesome day. We'll see you again next time. As always, if you liked today's episode, please hit subscribe subscribe, and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.